Hey, what's up, everybody? What's going on, Wally? Wally Waspers. Stream time. It's the time for the stream. And I have these tiny bottles of water. Yeah, pretty interesting. Pretty interesting to see this come to life here. I think we might have ended up getting some some kind of action, maybe with respect to interest rate swap hedging. I mean, does look like they're at least trying to push this under 26. I would not be surprised if we still move under 26. Getting real close. We're at that 500-minute line is like exactly $26. Very interesting to see that overlaid there. We're getting close, right? We're like right there. Very interesting to see. Yeah, very close to a bearish PMO cross on the 1-minute chart. What? Yeah, I don't know. How are we looking like shares right now? Shares to borrow. Those are back up. So got quite a bit more back on the shelf throughout the day today. It did briefly go down from 2.7 million to 1.8 million right around 11 o'clock. And then by noon, almost all of those are back on the shelf again. Very interesting. Don't know if we're gonna make it to 25 at this point. I know that's what I was. That last Friday I was like, oh, if it stays like this, we're definitely seeing sub 25. I think we had a pretty good chance at that, but there's just a couple moments, especially later in the week. So definitely seeing call wall migrate from 25 to 26 midweek. That was that wasn't that still didn't spell how it would go for the end of the week. But then seemingly right every time we started to really pull away from that $26 position, something would happen. We'd get some buying, we'd get like some dark pool orders or something that would come through, and then we just get catapulted back, not even just to 26, but through 26. So a lot of stuff's been going on in the background that's very interesting. Maybe correlated with interest rate swap hedging. That was sort of that was one thought. Because like today's price action where we just earlier on we just had this like diagonal line up this thing that right, see, whenever we see it just kind of ride the 20-minute, that says VWAP, right? That says a VWAP order. So definitely early here when I saw this in the pre-market and I was commenting on this on the video, it really looked like, all right, somebody's setting us up to maybe go down to 25 today. We'll get this move up. And basically for this part of the day, it really looks like that was the plan, right? And then this would just bleed out down the lower 25s, maybe a little bit more shorting, a little squiggly something over here. Who knows? But then, yeah, right around, what is this, 11 o'clock, 11:15, we just get a segment, a pretty decent sized VWAP order, I think came in and then, topped us out. Really interestingly, like I know, I don't just kind of, I'm not, you guys know me, I don't just like randomly draw lines on charts, right? That, I'm not a random chart line drawing person. But I drew this for fun. Actually, I drew this as like a meme for friends. I was like, what happens if we draw a wick from there and just extend it forward like through the top of this little peak here back with the Bitcoin buy? So, May candle to June candle. What does that look like? And very interestingly, we've just been kind of crowding underneath that. So lines that lines, maybe they matter, maybe they don't. But interesting to see that, definitely. And as well as the other things I just talked about. It will be interesting seeing how this unfolds. Yeah, very interesting right now. Getting some squiggles there off the 200 minute, I should say. Reggie77, you look like you have the same profile icon as Simple Rick. I thought you were going to be Simple Rick, but good to see you. What's up, Guido? Johnny? Hey, you can always roll. You can always put in a rolling order. Or you can just get assigned. It's fine, right? Get assigned. See what happens next week. Who knows? It's going to be an adventure. And just embrace the adventure. Part of the fun thing about setting up trades where you can't lose is you get to approach this stuff with a spirit of adventure. You get to be creative. You get to have a kind of childlike wonder in the sense of like, what's going to happen? Who knows? Let's find out. Let's find out what happens, right? If you get too fixed on kind of one outcome, you try to maybe have this desire to exercise control where there's no control to exercise. Then you're like, oh no, I got assigned. I could have made 30 more cents per share. Oh no, or something like that, right? But as long as you're picking a strike, that's the other thing I do that I think it's important to mention when going into this. I never set a call strike. I never set a strike for covered calls whenever I'm selling covered calls that is below my cost basis. Well, I guess strike premium aggregate, something like that. So I'm making sure that if I get assigned, right, I'm not losing money on that trade. So no matter what happens, either shares are getting sold for a profit or I'm keeping the premium and the shares and just, live to fight another day kind of a thing. That's how I approach that. And that way I know no matter what, it's like, I win this way, I win this way, right? I'm always winning. Office hours time. What's up, Daniel? What happened to the red swap? Well, the official day for it, I guess the day that Richard calculated, right? So he uses bottom to bottom measurement method. And so that the bottom to bottom that he had, I think it's every like 178 days for red swap or something like that. 179 is September 22nd, so Monday. Some of that could be what's keeping us down. At this point, it's a little difficult to tell. Yeah. Hard to say. We won't know, right? If we just kind of wake up on Monday and then the price is $2 down or something, it's going to be interesting. But it could be gone. Like that was kind of the hypothesis right back in March, was that it was gone. That the March 31st date was when this stuff got rolled, or closed even. So, yeah. What's up, man? Happy Friday to you, Mr. Theta Bucks. Yeah, and whenever Simple Rick gets in here, he has a very similar flag. Yeah. That's right. No need to panic when you have shares. It all works out, eh? you only get worried if you don't have the underlying asset that you promised you would sell somebody. That's when things get not so comfy. Wally, nope, I did not. Nope, I held them. Not sure what I want to do with these right now. I have a rolling order in for for an interval that I like. Right, I always target. I always try to target at least $1 per month per share in premium returns. So trying to get at least that on the roll so that I can average out to make sure between now and OPEX, I know I'm October OPEX, I know I'm getting that. So that should be fine. But if it doesn't and I get a sign, then I get a sign. And that'll be how that goes. That would be cool. That would be cool. I mean, just interesting to see, I think maybe we head up to where the 200-minute moving average is now, maybe do a little bouncy thing there, which is around like 26.12, 26.13, and then maybe we go back down again to 26. Still another 40 minutes. We might just hang out, in that little groove, but another 15 minutes or so, they might just, send a couple 100,000 shares at that thing, push the 26s out of the money, and then have us close at like 25.90 or something. Surprisingly, not like a crazy day otherwise. What was, volume pretty low. 5.3 million as of right now. So probably we'll close at like 27 or not 27, like 7 million, maybe 6.5. And then let's see the off exchange volume. Around 60% right now. So yeah, fairly typical for what we've seen recently. Yeah, for sure. So, or let's see, the second part of your questions here. Yeah, so rolling. So rolling works like this, right? Part of the idea, right? Part of the idea with covered calls, let's say, right, is you bet that the price is going to reach some point. You have some premium that you've collected, right? And let's say that you don't want to surrender that premium, or let's say you're underwater on a covered call, and you don't necessarily want to take the loss. So what can you do? You can push that loss out into the future, right? So that you're not, let's say, taxing your margin. I mean, when you roll the trade, like, okay, if you go and you put it in your log, you can put the closed leg, as a loss. It's not going to be a closed trade, but what you're doing is you're saying, okay, you're simultaneously buying to close one contract that you have open and selling to open another one. Okay. Now, what you want to do with rolling, or at least what I do with rolling, is I always make sure that I am targeting a contract that will give me a net credit. So, for example, right now I have a rolling order in, for same strike, $25, but out to October OPEX. And so, part of that is also going to be what you get for yourself. You buy yourself more time, right? You're doing a net credit. Some of that net credit has volatility baked into it. It has time baked into it. It's not just price. And you're getting yourself more time, of course, where the price can go down. And some of say, if there's intrinsic value in the contract, that can decrease. You can get some delta crush from theta loss, something like that. But basically what that allows you to do is you keep the same amount, or you get more cash right in your account based on this net credit. And you can just, right, essentially if you miss on the bet, you're like, I don't want to close this contract yet. You can just keep rolling the covered call out until you win. And the only situation where that doesn't work is if the stock goes up forever and never comes down back to your strike ever, which is possible, but not probable. So technically you can just keep doing that trade, right? Just keep doing it, just keep doing it, just keep doing it. And just keep putting premium into your account. And eventually the idea is that, it will be a profitable trade. You have to make sure that, like, when you're doing it, that you're getting a proper amount of net credit. Like I said, on that trade, I'm looking to say, like, okay, what's the difference between, how can I ensure that as I'm rolling this, I know that I'm going to get at least $1 per share in premium over that time span. That's what I target on a monthly basis. How can I make sure I'm getting at least that? Okay, well, you can put in the rolling order. And when you put in the rolling order, you're going to say, well, the price doesn't matter. I just want to make sure that the difference between the contract that I currently have open and the contract that I'm looking to open meets that specified range. So for me, right, that's $1. I can put the specified range. I want to make sure there's a difference of $1 between those contracts. So that, okay, when I'm looking at, net credit, making sure I'm getting a net credit, which means by doing this rolling trade, by closing the one leg and opening the other, the total amount of cash that's sitting in my account is going up, right? So not staying the same, not going down, but the total amount of cash that I can use, even though my account value is not changing as a result of that trade. At least to start, I'm making sure that cash that I have available is going up, and as long as I have that, then I'm good with the trade. So that's rolling, and you might even think about it as like as a martingale. I mean, it is kind of essentially martingale, and you're always at an advantage in terms of time. You're always at an advantage in terms of time. Yeah. So if you feel like doing that, if you don't feel like, if you're fine getting assigned and doing it that way, you can do it that way. You can get assigned. If you think the price is, immediately coming down, because that's another thing that happens, right? A lot of the times, we have a really sticky kind of OPEX, and then all of a sudden the price craters the following week or something like that, comes down $1. We get, it's much less volatile. Like I said, going into next week, we have a lot less open interest. We therefore have a lot less, total GEX, total gamma exposure, and therefore market moves do not command the same amount of hedging flows, which means that less money has a greater influence on the price throughout the day, right? So the greater the OI going into an options expiry, the more money you need to spend to move around the price a certain amount. The less OI, the less money you have to spend in the options market to move around the price. So as we come out of this September OPEX and go into next week, there's a lot less OI. It's not going to cost as much to move around the price. That means we're likely looking at more intraday volatility, bigger price swings. And of course, because we do not, and this is important, we do not have support at $25 to our downside. If we do not open above 26 and just have something pushing us up and keep pushing us up over 26, we don't have support to our downside. We don't have support to our downside. It means that there is a chance that if we do have this kind of swap thing to roll, red star swap, on the 22nd, that there really isn't anything in our way, options hedging wise, to keep us from just going down. So good to keep that in mind. But so whether you decide to roll or just get assigned, it can work out for you both ways. Really, the idea is set up the trade so that no matter what you do, you win. And so, right, the only risk for these types of trades, for covered call trades, especially with GameStop, is downside risk. Right? Where did you buy your shares? And is the price just going to go down? Is the stock price going to go down? Where is the floor of the stock price? Right now, it seems pretty solidly like GameStop will trade only at a minimum of that 2x cash minus liabilities floor, right? So, at like cash assets, like cash investments, cash and cash-like securities, plus Bitcoin minus liabilities times 2. Who knows? Something might happen where the valuation changes, but for now, that's the current downside. So as long as you don't think the stock is going to go to zero or go hang out around $10 for forever, even if it does, though, like think about this, right? Even if the stock goes down to $10, and you can get in returns, you can average $1 a month, and your average cost is like down around 22 or 23, where it was for like all of July or August. It'll take you just 1 year to get your cost basis down, your effective cost basis down, even if we go to $10. So like that's the thing about this stuff. That's the thing about options. That's the thing about derivatives. Like you end up with paper losses that then you get to offset by selling insurance on that asset to institutions and market makers. That's a way. That's actually a really helpful way if you want to explain to someone else. If you want to explain to somebody, like when you talk about doing options, blah blah blah, like I saw, like, oh, aren't you just a terrible? Like, aren't you doing what they're doing or whatever? It's like, well, no, right? Like they're in this situation where they need liquidity, right? They need they want to have insurance that if things go haywire, whoever this is, that they're going to be able to get access to shares. So they're willing to pay you that as an insurance premium, and they are obligated to take your trade because of their responsibilities as designated market maker. Part of the reason that following this trade strategy allows a retail trader to profit is because the market maker has to take the trade. Now, they're happy to do that. They're happy to take this even if it's a losing trade for them, because so much else of what they get as a market maker, fulfilling their bona fide market maker opportunities, whatever. So much of that works out in their favor that this doesn't really matter for them. It's worked into their profit loss model, something like that. Obviously, if you do it at too big of a scale, then they'll start to care about it. But Hey, what's up, Sharon? Is that you? Are you representing women in the world of big ideas? Let's see. Insider buy next week. They have until 9/29 to buy based on the company's guidelines, from what I understand. That'd be cool. It'd be cool if they bought. Wait, very interestingly, Ryan Cohen is also going to issue himself warrants. Did anybody else realize that? He's going to get 3.8 million warrants. Did that occur to anybody? Haven't seen anybody post about that. What's he going to do with those, huh? He's somebody who's got the cash to exercise those. Maybe he'll just sell them. I don't know. Maybe that's why he went into a margin account. I don't know. Ooh, XRT created more, huh? They're getting ready for something, I think. They're getting ready for something. I wonder if they push us. I wonder if we get a big bearish day on Monday. I wonder. I know I sound like a this week, especially. I'm just like all the hype. I start to get uneasy when I see the hype stuff. It's like, yeah, okay, this is great. The warrant issuing, great. Price going up. We like this. But the swap thing, and I don't know. They're going to, too many times you think it's just, wow, it's just going to go up forever. And then it doesn't, right? So I'd rather be cautious and wrong than overly optimistic and wrong. But obviously always permable on the stock. So what's up, Banana Hammock? Am I going to buy warrants? I do not have a plan at the moment to buy warrants. I guess I'll be issued warrants. I don't know what to do with those. What did I do? Well, I don't know. If we're issued warrants and the stock price is like really, really high, I don't know. I don't know what to do with those. It's going to depend. I'm going to look at the situation and I'm going to go like, what's happening now with these? I kind of suspect like March next year, like people are getting excited about the warrants. Great. Like, cool. You can be excited about the warrants. I like that they will result in cash going not to an options market maker, but to the company. That's cool. Depending on how they're priced. To go long a warrant instead of a call. I have to look and see how they get priced. That's the thing, to think about whether I'm going to buy them. Because I think we could. So Q2, obviously really good. What I think we're seeing now, like this price action, right? This move. I largely suspect, notice where we're kind of hanging out here, right? This is exactly where we stalled when we came up off of the second bond offering here, off of the first bond offering. We're stalling right in the same spot, right? So we just charged up, stalling right there in the mid 26s, right? We actually went a little bit higher back then. We went up toward 27, didn't quite get there now. So a little bit lower. But I suspect that this is something like an institutional, like kind of de-risking move. They may be, some institutions may be going like, they really are clearing, they are transforming the company. Let's just clear out our obligations while we have the chance. It's not going lower. Let's see. It's 23 something right now, 23.71. I even saw that. And I was like, I had some cash on the side. Didn't pull the trigger. Really wanted to. Didn't though. thought we might come back down once more like this week, but maybe we see it next week. It remains to be seen. But obviously, if I get the chance, I'll buy more. They may have just gone like, you know what? It's 2371 is pretty close to fair value. Let's just get these obligations cleared. Let's not deal with this going forward. Q3, be interested to see what Q3 looks like, but I suspect Q4 will be a monster quarter. It will be a monster quarter. Maybe the core business will, who knows what the core business is going to do this holiday season. In particular, we're getting rate cuts. Asset prices probably going to pump into the new year. Maybe that means they're going to do a rug pull sometime next year, but on the market, that is. But we get 2 more rate cuts. Let's say another 25 basis points October 29th, another 25 December 10th. Q3 earnings are good, and then Q4 earnings in March are really, really good. We might see that over 32 price. See, this is the thing, because these things last for a year. We could get kind of knocked up into that area. We kind of go up, sell down into Q3, maybe up a little bit for Q3 earnings in December. We get the rate cut, maybe back down again after kind of early January, and then kind of, I don't know, maybe we got another down season in there. Maybe there's another bond offering for Q3, who knows? But Q4 especially, that might be something that kind of, just keeps Super Mario punch jumping us up. And so the warrants might be interesting as an instrument to trade going into that, right? Something to hold on to until that moment. Especially if you get a bunch of them, we're going to get issued a bunch of them for free anyway. So interesting to see what happens with them. But I don't have a specific plan yet to trade them. Hey, Wardy, hope you had a good week too. Hey, Chris, can I summarize my understanding of the implications of selling CCs and potentially owing also warrants? Yeah. So as I remember what happened with AMC back in 2022, when they did the 8th dividend, what's going to happen is the current options chain, right? So all strikes between now and next October are going to require the delivery of also 10 warrants. So any contract that you open between now and then that you still hold, between now and the dividend issuance date, that you hold through the issuance of the dividend, will be converted into something probably called like GME 1. And so that whole options chain is going to get ported into GME 1. And all of those contracts are going to have a requirement that 10 warrants be delivered prior to warrant expiry. Okay. What is likely also to happen is that, because that's going to be a weird thing to trade and do liquidity stuff for, so that chain is gonna get probably less liquid than people would like. It's not gonna be very liquid. So what they will do, they will create a new chain that's going to be renamed GME. GME 1 will be the chain that exists now, and a new chain is going to open just called GME that will trade that doesn't have the warrants. So there will be 2 sets of options chains that your broker will show you. Depending on your broker, you might not even see the one with the warrants, right? You might have to, I don't know, if they're going to ask you to close Contracts, or maybe what they'll do in secret is they'll like sell the contract you have open and then exchange it for one of the new ones. Something like that. Not sure. But yeah. Yeah, this, right? GME 1. Yep. Yep, exactly this. So there will be two. If your broker doesn't let you have warrants, if it doesn't let you trade warrants, then I don't think you can trade that options chain. It won't even show it to you, I think. Yes. So they will adjust. They will adjust the prices. They will adjust the price. I mean, the price of the underlying will change too, I think, because right now the warrants are being priced into the shares, so they're priced into the options chain. What happens once the warrants are issued? I think the contracts will stay the same because the value will already be priced in. The underlying will change. The underlying GameStop will go down as the warrants become individually tradable. And so the warrant will be worth, or the option will be worth, 1.1 times 100 GME, something like that. Let's see. In the example I mentioned of rolling my 25 strike to October, do you now also owe warrants as part of the contract if assigned? So not if I close it, I think before October 3rd. But if I have it open, then yes, I would also have to deliver warrants. But that's no problem because I also have, because it's a covered call trade, I have the shares. Right? So I have the shares, so I will be issued warrants based on those shares, which will perfectly match up to my covered call. So not a problem. What you won't be able to do, you won't be able to use one set of calls for like poor man's covered calls with different options chains. So you can't use, you should be able to use the one with the warrants for the ones that don't have the warrants as, as a hedge for the ones that don't have the warrants. But the inverse, I don't think is true. What's up, Tom? Yeah, we're here. Started a little early just because it's later now for me in Cyprus. I was falling asleep last time. I'm already kind of sleepy, but it's better. Yeah, it's good. It's definitely good marketing. If Shinsasu is right here, it's definitely good marketing if rolling is what you do on the if it's a long trade, because you can be like, oh no, I didn't lose this long trade. I just didn't get the time right, so I'll just put in a little more cash, and right. So like that doesn't work because you just need to keep putting money into the slot machine. If it's a long trade, ooh, my contracts lost 90% of their value. Let me put in more money so I can roll them to another. No, that's a bad rolling strategy, right? But if you are doing it on the short side, you're martingaling because you just keep being given more money and you just wait, right? You buy yourself more time, but you're the one that's being given the money. That's the difference. Yeah, you can roll puts the same way too. You can roll puts the same way too. Say you. So how would this work? I haven't done it, but say you don't want to acquire your puts at the strike price. You can just keep rolling them. Like, I don't know. Let's say you sell a bunch of puts at 30, and it closes, at 27. You're like, oh no, I don't want to buy them at 30 now because we're going down. What do I do? Well, okay, let's say you don't want to take the loss, so you I don't know, you go to the side and you say like, all right, keep the strike the same, so I don't need to put up any more cash collateral. I don't need to put in more cash, but if I do a rolling trade, then let's say I push it out a month or I push it out 2 months because I think GameStop's going to come back up and then these are going to be worthless in 2 months. Then as long as you're doing it for a net credit, then that trade is going to end up as a profit, right? So, but again, you want to make sure that when you roll, you're getting a net credit. Don't be doing net debit stuff, and don't do anything that requires you to put more money in, right? If every time you need to roll, you need to contribute more money from an outside source, it's not a sustainable trade, right? So, doing a net credit, but kind of not needing to get more shares, let's say for your covered call, or not needing to contribute more cash in order to keep your short put alive. That's what you need to do in order to make that trade work. Because then it's like, right, it's like martingaling at that point. Right. Although martingaling, right, usually involves that you have to double your bet, right? Martingaling is I lost this hand, so on the next hand, I will double the amount of money that I play with, and if I win, then not only will I get all the money back that I lost, but I'll also make 60%. So this kind of works like that, but you're just constantly having. The market maker is just giving you a loan to martingale, right? It's like you're playing at the table, right? You play a hand, you lose, you're like, oh man, I'm gonna go double or nothing. And then you go to the casino guy and you're like, lend me double or nothing. And he's like, all right, fine. Double or nothing. Ooh, it didn't work out. Let's do it again. He's like, okay, and he'll just keep doing that. And you'll never be margin called, I guess, right? You just keep having cash come into your account every time you roll. And sometimes I think with certain brokers, like if you don't do it as a multi-leg trade and you get too deep in the hole, let's say that they'll say, oh, unable to close this, et cetera, because you don't have enough cash in your account. But if you want to roll to keep that alive, you can roll. And because both trades will go in, it goes in as a multi-leg trade, you will have the necessary cash in your account in order to do that. So your broker won't block it from going through as if it were a single leg trade, is more or less how that shakes out. Yeah, I talked about this a little bit. We might go down. I know, I said that last week too, right? And we did start to do it a little bit, but a couple different points. But I'm wary of that. Like I said, I think going into October 3rd, I think we go up, but next week for me is a bit of a wild card. Maybe we kind of go down early in the week and then come back up towards the end. We don't have, if we go look at our gamma, Right? We don't have anything below us here. If we get pushed up if we open up and we're trading, let's see, in this range, then yeah, we can get kind of lodged in here, but we need to have buying support continue. So what I think is largely going to be the case is what we'll have to keep an eye out for is, okay, is there going to be a continuation of this kind of external buying that's keeping us pushed up here? If yes, then we end up in this range. And you're right, we will trade between 26 and 28. And then maybe we sustain that later into the week. See what happens as far as how options are rolled. If not, if we open down, then we'll have a little speed bump at 25, but really there's not that much below us to kind of catch the price as we move down. And truthfully speaking, I do not know which way we will go because I do not know about the underlying elements that are going to, propel some of that buying or something like that. But, yeah. That'd be cool. Cool to just see a class action lawsuit on hands. Hey, Simple Rick. We had another Reggie. Reggie was in here too. Reggie had an American flag too. See, Reggie? This is Simple Rick. Very similar profile pictures. Yeah, there could be an arbitrage opportunity there. There was with Ape Dividend when it first got issued, right? So they were not perfectly correlated. So there was an opportunity there where, like, Ape was overvalued versus what it correlated to in AMC, and so it was like, oh, okay, go buy this, short this, do this, right? Something like that. But I mean, that's tricky to trade. I would not necessarily tell people to go, I don't tell people to do anything, but wouldn't tell people to go do that. Hey, Zach. Yeah, it's tough. It is tough. They wouldn't budge. Not as much as we would have liked maybe on that, right? But yeah, hey, made a profit regardless. Nice, man. Cheers. Ooh, that's cool. That's very cool. The Rocket Ballinger Highway in Flint. Very cool. I don't know how they're going to synthesize warrants. Maybe they'll just like put a mark in somebody's account. I mean, they can just put a mark in somebody's account. It's really going to depend like who's doing what, in the back end. That's ultimately what it comes down to, I think. So not after warrant expiration. Options after warrant expiration will not have warrants tied to them. Have I been shopping at Lidl? Yeah, sometimes at Lidl. Sometimes I shop there, and sometimes at Sklavenitis for groceries. There are cats everywhere. This is a country absolutely overrun with cats. There are more cats that live here than people, believe it or not. And you don't have them, they have you. So there are cats all over the streets, all over people's, houses, gardens. They're just doing their own thing. Lots of cats. If you love cats, come to Cyprus. Oh, did we slip right through 26 there? I haven't been looking. Oh no, we're back up. Going back. Oh, what happened here? Here we go. They will do this. They will do this for some. Some brokers have already said these. I think Interactive brokers, I think, will issue them, but not allow trading of them. Like Robinhood's not even going to issue them. I think Robinhood is just issuing cash. So there's going to be a lot of cash in lieu of delivery. Oh, maybe. I don't know that. I don't know about that if they had a snake problem. Haven't seen many snakes. Cats are pretty good at getting rid of snakes. Great reaction times. Are there that many strays? Yeah, I guess it's very rare to see stray dogs too much anymore. I think only in Italy is like the only place I see stray dogs. I forget where I saw that. I mean, I don't use Robinhood, but is Robinhood issuing GME warrants? I think they're not. So just looking at Supersonic right now, Robinhood does not support warrants. Wait, this is updated call to Robinhood confirms support of warrants, so maybe they will. Wealth Simple will soon support warrants. Fidelity does. Schwab does. E-Trade, yes. IBKR, but I just saw recently that they were not. It's good to call them. It's good to call them. Let's see. Then somebody else says they will. Good to call them. Good to call them. Oh, interesting. Now Shinsasu says you can get and trade the warrants from Interactive brokers, but you can't exercise them. That's interesting. Cats are good at timing the bottom. They are. Defeating snakes and timing the bottom, for sure. Wait, that's funny. The legal owner funds Israeli weapons technology. Is that true? The owner of legal. The Schwarz Group. Dieter Schwarz. Dieter Schwarz also owns the hypermarket chain Kaufland. Kaufland's good. See, he owns businesses in recycling and cloud technology. Dieter Schwarz. Revenue of over 160 billion. They face up against Aldi. I guess Lido was founded by his father, 1932. Very interesting. So from fueling the Nazis to funding Israeli weapons technology, what will the Germans think of next? Hey, close over 26, not bad. Not bad. Very cool. Yeah, so what's the print on the options? Options print is going to be, yeah, 2608, somewhere like that. So very interesting to see the 26s closing the money too. So, ooh, a lot of big Big volume on close. Almost 2.5 million. Yeah. Very cool. There you go, guys. That was different. I applauded it for being different. Yeah, best to go ahead and call your broker is the best thing to do, or message support or something like that. Yeah, they don't know, right? And it'll change, right? It'll change down to like, the week before or something like that. So they go to get this stuff figured out. Yeah, it's also going to be, I guess, the first time, first time in the past 15 months we've had a monthly OPEX close above a call GEX wall. I mean, pretty close to it, but we did close above. Side effects to cup, baby. Oh, hurt? No, 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 no hurt. Options. You think you could have fun like this with? You think you get these premiums on SPY? All that zero DTE nonsense going on there. Just go stick your head. Go stick your head in there. Don't trade anything. Don't trade anything. This is not trade advice, but go just like go set your whatever. Take your trading platform, set like the price like update to per tick. Right. So go into the settings. You'll see you'll have the option like do it every second, refresh every 5 seconds, half second, set it to the tick. And then go take a look at whatever is SPY 0 DT and watch those calls. Just watch that nonsense. It is quite something to behold. I will say that. I will say that. So that was what, a trillion in notional value that just expired over on SPY. Yeah, $1 trillion. Yeah, I think so. Right, it's important to remember that the institutions are not a monolith, right? So what I feel like I'm in that Key and Peele sketch. We Black Republicans are not a monolith, not a monolith. But that's how I feel about these institutions, right? Market making institutions, Wall Street institution, not a monolith. We are not a monolith. Yes, and what I think likely happened this week, what I pointed out maybe yesterday's video, some institution probably had some obligations they needed to clear out, and they're just like, let's do it, let's punch it through, let's just get this stuff done. So under those circumstances, it can be very difficult for the market maker to actually take moves that will adjust the price significantly, right? So I mean, they can do things that kind of keep things contained. You'll notice we didn't hit a new high from our after hours price with respect to earnings. So earnings, our price was higher. So the price was contained, but it seems like that's all it could do, right? And keep the $26 calls from not having too much value, right? They also hedge for this stuff, so it's not it's not the end of the world. It's just not optimal, right? They're probably still profiting from this. We didn't close at 40. We didn't blow out the options chain so everything's in the money. That's not profitable. But if one big position is in the money and another big position is slightly in the money, that's not optimal, but that's not the end of the world. Yeah. Closer to 50. Closer to 50. And it's certainly over 50 if you include the 25.5s. Yeah. Total. Yeah, total is 78,000. But interesting, right? Because it means that over half the in the money OI was just at 25 and 26. If you go on your chart and just hover over the final volume bar of the day, you'll see like 2.4 million volume on the close. Yeah, very good. Nice. Win is a win, right? Happy to be surprised, right? Enjoy the appreciation in the shares there too, right? Yeah, somebody was working to keep it up there. I know poor market makers, this 1 week they don't get their optimal price point, right? Hey, as long as you got net credit, you're doing just fine, right? That's the key. Always make sure you get a net credit. Do not go net debit. Net credit. So I think no. I mean, maybe they didn't hedge this stuff. Maybe that's a tactic that they took. Maybe it'll be. I can only say I think it's going to be more volatile on Monday. That's kind of it. But they should already be hedged. That's the idea of what they do with gamma hedging. Is they should already be hedged so that they can deliver on Monday with no problem. We are going to Drax Lam Skiles. Carries. Yeah, that makes sense. That makes sense if this whole week was XRT. That makes sense. If they created 5 million shares this week, that makes total sense. That was XRT. Absolutely. Just fill that sucker back up. It's over 7 million now. Units outstanding is now high. Like they haven't, I don't know the last time that units outstanding were that high. Let's see. Do brokers moving shares to computer shares for their clients have to locate a real share? I think so. Maybe, but keep in mind you have to pay for that. Also, like they would just if retail started doing that en masse, then they would just find a way to create liquidity. I think because it takes time. It takes like to do the ACAT. It takes like 2 weeks, I think. So they would find a way to make sure that wouldn't be an issue. I think might be annoying, but I don't know that it would like break anything. Well, that's very interesting. The delta on the close with the 26s was 0.75. Let's see. Oh, yeah. I see it's a 0.86 is what I have on Schwab. So maybe. Maybe, or let's see. Hmm. I think no. I think it has to do with the fact that it was only just in the money. So Delta just measures like how much the options contract would change in value based on a $1 move in the underlying. So if it says on your broker, whatever you're looking at, if it says the delta is 0.75, it means that if right now magically GameStop's price were to transpose up $1, then the options contract would increase in value by 75 cents. My broker says like 86. So that comes pretty close to, I mean, should be close to 1, but in any case, I don't think so. I think they're probably hedged. Them Terras is going to pay. Yeah, that's something to look out for. Shinsasu's right. If what we just saw was indeed XRT creation, and they use the Len pool to, I guess, meet any of these hedging requirements that are unmet, the Len pool will go up and then come down, I guess. Yeah, well, he's right. Yeah, that was the last time we saw shares outstanding get that high. Very interesting. Yeah, I was gonna say this is not something we see very often. Oh, that's interesting. You don't have to pay to transfer between Vitelli and ComputerShare. Did not know that. I have not read this paper. I will check this out. You can only lend what you own, inferring daily institutional trading from Security Lending Supply, University of Alberta. Oh, check this out. Let's see. You can only lend what you own. (2024) paper here. C. Institutions make their equity holdings lendable, allowing us to use the daily change in lendable shares to proxy daily net institutional trading in each stock. Our proxy better tracks quarterly changes in institutional ownership than existing alternatives or even a subset of actual institutional trades, especially if we allow the corresponding elasticity to vary across stocks. Using this proxy, we document one price momentum anomaly obtains only if institutional trading and intraday returns oppose during the portfolio formation period, consistent with underreaction. 2, negative short-term return predictability consistent with transitory institutional price impacts. And 3, institutions unwind holdings before earnings announcement and reestablish them afterwards, suggesting the earnings announcement premium is trade-driven. Very interesting. I'll take a look at this in greater depth. Abstract doesn't provide too much information, but sounds interesting. How do we know if XRT creation is done? We don't. They can just do more. They can do more. If it maps to some FTDs, then that window should be closed. If it's not closed, then they can do some more creation. If we come in on Monday and then the outstanding goes up even more, guess they're still creating. 20 mil is very interesting. We haven't seen anything close to 20 mil in a very long time. I have no idea even when that was. Yeah. Yeah, it's from FTDs. Today is the last day. And they can use earnings as the cover for the T plus 33. Yeah. Very interesting. Actually, it's funny you should mention that, Cole. I was actually thinking of preparing that. I was thinking about doing it too. Like, I noticed, for example, like a number of people on Twitter, like I wish, I wish I knew some of the stuff that I know now, like back when I was, say, like a late teenager or something like that. Because like I was pretty frugal as a teenager. I didn't like spend on dumb stuff, but I didn't like know to invest any of my money or like what was going on. Or I started experimenting with things, I think in like 2015, 2016, like experimented with like a little crypto, and then invested in an ice cream company that didn't like pan out. Like tried to do a startup, didn't pan out. That was more kind of leadership, personnel related. But yeah, or even now what's kind of going on with options and financial markets, and even just to like know, like, hey, just so you know, this is what's going on in the world. This is what's happening to your money. Like, don't like this is what the government is doing. This is what the Fed is doing. This is what this is. So if you're having a hard time, like, here's a pathway out of it. And here's what you should be preparing for. A job is not necessarily just going to save you from this problem. When I was in college, like kids were just so like focused on like a job. It's like, yeah, it's important to get a job, but like, and then what, right? That's not the end all be all. I mean, in a lot of ways, right? But I think too, if you can like, if people feel that money is scarce, if people feel that it is becoming increasingly difficult to get what they need to start up families, and that like that's a major part, I think, of our population problem. I think is just like being, maybe what would you say, unfounding the relationships that are necessary in order for the support of a family, something like that. In a number of different ways, right? But I was thinking about that, putting together something like a course, and wanted to like teach some of that stuff to try to get that out to like high school kids, college kids, something like that. Go like an Instagram, TikTok route to kind of get their attention to it, and just be like, do it that way, and to reach a different audience. Because I know, high schoolers, college kids, I think don't get as like, they're clearly interested. They start to get interested in money, but like it's not like a problem for them yet, right? And that's the sort of thing. Like, okay, when did I start caring more about this stuff? When it became a problem for me. So that lines up pretty closely, actually, right around the time I met my wife. So. But it's a thing, right? Did I inherit the problem because that's when I met my wife, or did I meet my wife because I was ready to deal with the problem? Yeah. So I don't actually mean it that way because she's not actually a big spender, which is, I mean, more, okay, more than me because I'm very austere. I don't buy myself shit like at all. Like I just get wrapped up in my work and like I forget. Like I'm the kind of guy that just like I'll micromanage the economy of my diet and be like, it doesn't matter if it tastes bad. Like it's a great deal and I'm not starving, um, so I would not call her a big spender, but just the fact, right? That if you're a guy, if you're a single guy, like you could be happy with very little money. But then when you realize as a man, it's not your job to be happy on earth, um, but your job to do good things for others, um, to do things that are meaningful, to suffer in a way that is meaningful. That's purpose in life, right? Not just do what doesn't make you feel anxious or something like that, right? Um, yeah. So interesting to think about, but yeah, that's one thing I had in terms of this idea of putting together a course. And sort of like, there's a lot of concepts I think I go over, I return to a lot when I'm talking about this stuff, but um, not all of it is necessarily like kind of organized in an easy to access library. Like nobody's going back and watching like 100 of my videos to, get all the concepts watered down or something like that. If you guys find good clips, if there's some good clip that you make for yourself with like YouTube editor or something like that, or if you think something like, oh, this timestamp would make a good clip, like feel free to comment on that. Like I'll just go clip it out and put it in like shorts or something. But yeah, that was something I was thinking of. Yeah, we could see a little pre-market action from the creation stuff on Monday, and maybe we do, and then we drop. Um, I was very much concerned. We still closed below where we were yesterday, so that is another red day in a row. Not bad for a red day, truth be told. Or I guess not actually a red day because we opened much lower than that. Yeah. Technically a green candle, but a lower close. Yeah, lower close. Yeah, 1, 2, 3 days in a row lower close. I would be surprised to not see us work back toward 25 and that 100-day moving average there. Yeah. Yeah, they are. We go back to zero. Ooh, I don't think we're. Zero would be. Zero would be bad. Zero would be bad. Wise words. Take that. Write that on your mood board this weekend. Zero would be bad. Quotation marks. Wisdom. Yeah. All right. Very good. I think we will wrap up stream there for today. Yeah, looking forward to seeing what we saw next week. Very exciting to see $26. Obviously, that's an interesting turn of events. Interesting to see what next week looks like, especially with some of that gamma support kind of disappearing to the downside. So, very curious to see how we go ahead and open the week there. Yeah, and then curious to see what then goes on and happens to us heading into what did I say? Heading into the ex dividend date. Yeah, heading into ex dividend date. So going to be an exciting couple of weeks here, and then yeah, so let us begin the October OPEX period. So thanks, guys. Have a great weekend, and yeah, we'll see you. I'll see if I can get that. I'll see if I can get that video out. It might take me some time. People were looking at me doing like a late medieval church history and Reformation videos. Maybe I'll do that. That'd be interesting. Might take some time, but thanks, Guido. Thanks, Tom. See you guys. See you, Maxie. Take care, Cole. Thanks, everybody. Have a great weekend.